Hello and welcome to Business Morning here on France24. Let's start with a look at today's main business stories in the world's press. Moscow resumes its gas war against Ukraine. That's on the front page of the Russian daily Kommersant. Russia's gas monopoly Gazprom has warned Kiev it will reduce its gas supplies from next Monday if a $1.5 billion debt is not paid off. This comes ahead of a visit to Moscow by Ukrainian President Viktor Yushchenko. A similar dispute in January 2006 disrupted exports to several European countries. The French daily Les Echos notes a change of tone in the European Central Bank's policy. The bank kept its benchmark interest rate unchanged on Thursday, but its chairman, Jean-Claude Trichet, expressed more concerns about the European economy than he did in previous months. The paper thinks the ECB could soon follow the Bank of England, which announced another rate cut yesterday. The UK Financial Times says gloomy forecasts are adding to the woes of the technology sector. Downbeat earnings forecasts from the American Cisco Systems and a German chip maker Infineon have caused another leg of tech stock retreat in recent days. The paper notes that while Infineon's caution stemmed from weaker orders from mobile phone makers, Cisco's is an indication of a wider slowdown in demand from big corporate customers. Now, the U.S. Congress has passed a $167 billion stimulus package to bolster the world's largest economy and avoid a recession. The plan will provide most American taxpayers with a rebate check for 2008. The Senate finally approved the measures after a week of discussions on whether to provide extra money to retired people and the elderly.
The yeas are 81, the nays are 16, and the bill passed.
After much compromise, the U.S. Congress finally approved an economic stimulus plan worth $168 billion. By May, tens of millions of Americans will receive tax rebate checks in their mailboxes, up to $600 for each taxpayer and $300 for low-income retirees and military veterans. Wealthy Americans will not benefit from this plan, as tax relief phases out for people earning more than $75,000. But the final plan will not offer heating aid for the poor, nor expand unemployment benefits, much to the Democrats' dismay. After George Bush's original proposal, they had hoped to pass a more generous bill on Wednesday, but failed to get enough votes in the Senate. Now, both houses of Congress have reached a compromise. With a recession looming, senators were under increasing pressure to come up with a plan. Their aim to increase consumer spending and boost the economy. President Bush is expected to sign the bill next week. Its success depends on whether Americans spend their rebate checks and spur the economy or stash them in their bank accounts.
Now, as U.S. politicians scramble to throw a lifeline to struggling families, there are new signs that many households are already pulling back on their spending. Americans' love affair with credit cards is well known, but with the recession lurking, there are signs that many of them are facing a debt mountain they're unable to climb. With more, I'm joined now by our business editor, Douglas Herbert.
Yeah, hi, Marcus. Now, I know you're not American, but if you were, you would know the term maxing out on your credit card. You know, basically, if you've ever
had... Who needs to be American to know that
Well,
term?
let me try to explain this to you, though. The concept of having 10 credit card bills arrive in your mailbox on one day and having to pay them all in a month. I've experienced this many times in the past, but basically, Americans, more than most, even more than the British, who are probably the second in this race, use plastic for virtually everything. In the past, the trend has been that they've used cards mostly for what we call discretionary purchases, big things like furniture, appliances, jewelry. In recent years, though, we've seen that credit cards are becoming more and more used for even the most basic necessities. We're talking petrol. We're talking grocery shopping. McDonald's takes credit cards. People use them to buy a Big Mac. Basically, plastic is it. You'll find a lot of Americans who don't have any cash in their wallets ever. It's all, and not even checks, just credit cards. The problem now, though, we're seeing is more people are being delinquent. They're missing their payments. They're taking more than 60 days to pay, and that's just the basic minimum. You could rack up $5,000 a month. That's about the average, family's bill over a month or 2 months or whatever, but only have to pay $100 to $200 a month. They're missing even these minimum payments. We're seeing credit card debt stacking up, but at a slower rate. In December, it only rose at about 2.7%. That's sharply down from almost 14% in November. So it's a sign that consumer spending, credit borrowing is slowing in the U.S., that this love affair with credit cards may be slowing because they're being forced to.
Why don't they just stop using the credit card?
It's like a disease. Think of it as a disease. You become so dependent on your plastic, and the credit card issuers, the big companies, MasterCard, American Express, Capital One in the U.S., they encourage you. They don't want to see you pay your whole debt. They want you to keep racking up this debt. It's a booming business in the United States and in several other countries as well. And it's a virus. And after a certain point, you're so addicted, and your immune system breaks down.
All right, we need to go into credit card rehab, it sounds like. Thank you very much, Doug Herbert. U.S. oil giant ExxonMobil has won a court order to freeze up to $36 billion in Venezuelan assets. The firm has been fighting for compensation since Venezuelan President Hugo Chavez took its stake in heavy oil projects in the country last June. Venezuela's state oil firm PDVSA was ordered by a British court not to sell any of its assets up to a value of $12 billion. Assets worth another $24 billion were also frozen in the Netherlands. Now it's time for our daily update of business news in Asia with our Beijing correspondent Henry Morton. Today we start with Japan, which is building up its foreign exchange reserves. Henry.
Yes, Japan's foreign exchange reserves, the second largest in the world after China, hit a record high of $996 billion at the end of January as falling interest rates boosted the value of foreign bonds in the stockpile. Rising gold prices and euro appreciation also pushed up the value of euro-denominated assets in dollar terms, with reserves now 11% higher than they were a year ago. January's figure includes $844 billion in securities and $124 billion in deposits, with the rest made up of IMF reserve positions, special drawing rights and gold stocks. We move to China, where foreign research and development continues to boom, with multinationals setting up 1,160 institutions in the country by the end of 2007. Total revenue from the high-tech industry was more than $706 billion the year before. However, China remains highly dependent on foreign input and lacks core technology still. The country made 210,000 invention patent applications in 2006, the fourth largest in the world, but 40% of those were coming from foreign companies. Staying in China, and the country looks set to become the second largest advertising market in the world this year, thanks to the Olympic Games. It's estimated that $42 billion will be spent this year on advertising in a market that's grown 7 times in the last 8 years. Those end the stories making the business news here in Asia today. Have a good weekend, and I'll see you again on Monday.
Will do. Thanks very much, Henry Morton, reporting there from Beijing. And before we close this edition, let's have a quick look at the world's stock markets. Wall Street shares finished higher yesterday, despite a weak outlook from Cisco Systems, which, as we saw earlier, added to jitters about the technology sector and the U.S. economy in general. And this is where the Nikkei stands in Tokyo at the moment. Thank you very much for watching France 24. That's all for Business Morning for now. Stay with us.